Welcome to the Osborne Financial Group podcast, hosted by Jared Osborne. Join us for expert insights on wealth management strategies, essential tips for securing your financial future, and in-depth discussions on life and health insurance options. Get practical advice for protecting your assets and loved ones, proven strategies for maximizing investments, and real-life examples to illustrate key concepts. Stay tuned for Q&A sessions with industry professionals and actionable steps to take control of your finances and insurance needs. Tune in now and empower your financial journey.
Hello, everyone, and welcome back. Jeremy Wolf here alongside the man with the financial plan, Jared Osborne. Jared, always a pleasure, my brother. Good to see you.
Good to see you, Jeremy. Welcome, everybody.
Yes, welcome. Jared, I was thinking the other day about how we all typically, hopefully, we all go to the doctor every year for health and wellness checkups, right? We all get a physical. But how many of us can say the same for our financial health? I know I can't, and I know most people probably can't. So today we're really going to get into a practical yearly financial health checkup, what you can review, why it matters, and how small updates each year can keep us all on track. Jared, first off, why is it important in your mind for people to do an annual review of their finances, even if nothing has changed in their life?
Just like you just mentioned, hopefully most people go for an annual checkup. You should do the same for your finances. There's a lot of, if you compare a lot of these, there's a lot of similarities between the two in regards to if you go for preventative or you go for blood work and all these things, whether they're preventative, you check your finances for certain things that, hopefully you can check now to make sure that you don't have future issues, or check for the problems now, or are there any lingering issues that you may not know about to take a closer look at. Yeah, throughout every year, maybe even twice a year, you should look at your finances. Look, there's a lot of fluidity in this world in terms of taxes, laws changing, and every year that happens. This year there was that big beautiful bill. Things are going to change in 2026. Things are going to change with health insurance coming up in 2026 during open enrollment. And these are the type of things you need to check every year to make sure that, you're going to continue on that, hopefully a financial path that you've set up for yourself, whether in your retirement, or depending on what stage you're in your life.
For sure. There's so many external things changing around us. Everything's fluid, but even in our own lives, right? Our goals change pretty frequently, right? Our priorities change. So there's so many moving parts, and it's so important. But even for somebody that necessarily maybe hasn't had much change in their life, I think checking in and getting into the habit, we've talked about this before, trying to develop like these mindset habits and trying to just shining a light on your financial situation and knowing that every year or every 6 months, you're going to be doing an audit of yourself, whether it's with a trusted advisor or yourself. Like mentally now throughout the year, you're thinking about what I could be doing to set yourself up for success. So a lot of it is just about this mindset.
Absolutely. Look, everybody's got different goals. Everybody's got different finances. Some people think, oh, I don't make a lot of money, or I'm not at that level yet. I think we talked in the last podcast about starting savings early.
Yep.
Even if it's relatively speaking, not a lot of money, it could go a long way or can make a big difference down the road. And you continue to increase that if possible. But we all have different goals. We're all at different stages of our life. But absolutely, just like your health, you should be monitoring your finances. But most people look at their finances daily, at least peripherally. First thing I do when I wake up is check my bank account, just because I want to make sure there's no fraud, or money went out, or bills got paid, that there's money in certain accounts for my kids or for my wife if there's something that needs to be bought. But it's a daily thing. Not to say you have to do a financial checkup every day or a review, but most people think about their money a lot. And why not make sure that you have a plan set up correctly, that it's efficient, that it's doable, that it's realistic. That's a big issue. Is you meet with people and they want to do all this stuff like we all do, but you got to be realistic with your goals. And there's ways to do it. Even like I said, if you start off investing a little or putting a little away, it makes a big difference in the long run, especially when you start early.
Yeah. And yeah, sure, we all pay attention, and that's very important. Hopefully, we're paying attention, right? There's charges coming up on our credit cards we haven't looked at in a year. What is that? Hopefully, we're paying attention, but there's a distinction and there's a difference between paying attention every day and actually like having a full blown assessment. And I think that's important as you start to develop wealth and as you start to develop assets and things like that, to have somebody like yourself, a financial planner, that you could have these meetings with, be it once a year or twice a year, where you're actually sitting down. And there's also this air of accountability, right? When you have somebody else that you're working with, something in the back of your head, again, is just feeding that idea of, okay, I got to get everything ready because I know I'm going to be doing this. And it just helps, going back to that mindset again, getting you into the habits for consistency. And you're not going to be able to achieve your goals if you have no plan in place. And a large part of that is your financial health.
Look, absolutely. And just like you can compare it to your health or going to the doctor, I'm guilty of this too. You don't have time to go, you don't want to deal with it. Oh, you'll put it off. I see that all the time in finances. I don't run. And look, there's plenty of people who understand it who don't need me. I tell people, what do you need me for? You're unless you just don't have the time. But there are a lot of people just like they don't understand what's going on. They find it overwhelming. Just like health insurance, it's a very common thing I get between the two. Oh, I don't understand. You explain it to me, and I'll leave, and I forget everything, which is I understand. Same, or they don't want to deal with it, or just get me something. At the end of the day, just like your health insurance, I tell people health insurance is one of those things now, or your health, where you have to be involved. Gone are the days where you pay a copay and you get your preventative, or you need to understand your insurance. You need to understand a little bit. You need to understand what you're going in for. Listen to the doctor, understand co-payments, co-insurance. Sometimes you have to get involved with claims. It's just a lot more cumbersome and time consuming these days just because of the nature of the industry. Unfortunately, I'm not a fan of, we have a lot of problems with this industry, but it is what it is at the moment. Just like your finances, a lot of people they go through the motion of their day to day. They don't even realize how much debt they have, what interest they're paying on their debt, what their cash flow is, what are they saving? What are they saving? How long do I have an emergency fund? How long do I have to save to reach my goals? What are my goals? What are my risks and risk tolerances I want to take in the market? What's going on? Where should I be invested? How much should I be invested in the market? How much should I be invested in more fixed income stuff? So there's a lot that goes into your finances that if you need to sit with somebody, whether it be me or someone else or somebody you trust, you should do the same for your health insurance or your health. These are two areas, are probably two of the most important things in your life: your health, your finances, obviously your family, things like that, maybe your religion or whatever. But it's a top five. Two out of the top five are definitely your health and your finances, for most people at least. And so why not take responsibility, like you said, and look at and review what you have or what you think you should have or want to have in the future, and make goals, set up a plan, just like you would for your health. Like you go to the doctor, you may need certain prescriptions, you may need certain blood work, you may need certain tests. Same thing for your finances. You may need to invest in certain things. You may need to put on auto draft. You may need to put money into your 401ks through work, or IRAs if you don't have a 401k at work, or life insurance, umbrella policy. All these things make up your financial pick. So it's a lot. And the sooner you get it under control or start that process of planning, the healthier financially healthier you will be in the future. But it has to be tweaked occasionally, sometimes more than occasionally. Sometimes, like you said, things change in your life. Hopefully, most people start making more money and you start putting more money away, or you start doing things differently for tax purposes because you're in a different tax bracket, or you're making more money where you're in a higher tax bracket. So you want to limit some of the taxes if possible. There's like we just said, it's fluid. You need to look at these things at least once a year, maybe even twice a year, depending on the complexity of it. And you should have others involved. You should have your financial advisor if you can't do it on your own.
Yeah, on that note, you mentioned
Yeah.
earlier, you said if somebody has experience and they have their own situation on lockdown, I would still argue that for somebody like that, it's still useful to have somebody on the outside that can assess where you're at, because we tend to look at things through tunnel vision, right? And we have our own perspectives, and we might not be noticing things. We might be very proficient at how these investments work and our strategy, but we may be missing something. And to have somebody from the outside come look in, they might be able to bring something to your attention that could ultimately help your overall portfolio.
Yeah, to have another set of eyes on it. But like I said, there are certain people that I sit with that I'm happy to help them. But a lot of times, not a lot of times, but sometimes, look, you seem to be investing. I'm here to help you if you need it, but you're doing fine. You're set up well. There's certain areas that you can tweak things. But yeah, so have another set of eyes is fine. But like I tell people, if you don't need me, you don't have to pay for me if you're doing on your own. That's obviously I want to help people. It's my job.
We just
But
need to have you as a friend, and then you'll come in
yeah,
and
a
some
lot of
tricks
my
for free,
friends
right?
take advantage of it. That's okay. I'm happy to help as long as they're not using somebody else when they need it. But look, for most people, it is a little bit
Most
of,
people need the help.
yeah, need the help. It's not what they do. And whether they need me all 100% or they just need me for certain things, whether their insurance or, hey, you need to set up a retirement plan at work because they're a small business. We can help with that as well. Save them hopefully on taxes. And so they're investing correctly. So yeah, that's the, but it needs to be looked at. You have to have, it is okay to have another set of eyes on it, whether that's an accountant to make sure that you're being tax efficient with your situation, whether that's a trust attorney to set up a trust or a will, which, I just to take a step back, this is what you talk about, making sure you look at your stuff. I recently had a client that unfortunately passed away. For the past 2 years, I've been telling her, hey, make sure you set up a will and a trust. She was elderly. She didn't have a lot of family. She didn't have a will or trust. Every few months I would talk to her. And it didn't benefit me. You know what? It was more of a, hey, this is what you need to do. She passed away, had no will and trust, and now her sister, who she didn't get along with, is dealing with her estate, and has to hire an attorney because she had no will or trust.
Fun.
Now she's gonna have to go through probate. It's gonna be very expensive, and she has substantial assets, and it's gonna be a long process before that money is dispersed, and it's gonna be an expensive process. So these are the type of things that I tell people, and believe it or not, it's it's a lot of the wealthier people, the people with a lot more money that don't want to deal with it, set up their wills and trusts because they think, oh, I'll do it. Don't worry, I have plenty of time. Or or balking on things like long-term care or life insurance or disability insurance. It's usually the times when you need it, when you like realize, oh,
It's on your radar. Yeah, you're not thinking about it.
or
When you're thinking
you
about
have
it.
a claim or you get sick. Oh, I need long-term care now. Sorry, probably too late. Or I need life insurance because, hey, I just had a scary situation. That's fine. You could probably still get life insurance because obviously you didn't pass away, but you're not as healthy. Now you're going to be paying 3 or 4 times as much.
Yep.
Yes, taking a look at your situation and making sure that you're doing the things early on so you don't have to hopefully pay for it down the road or pay more for it if you can even get the whatever specific coverage. And you're going to kick yourself for realizing, hey, I I was lazy or I didn't want to spend the money at that time. Now you're going to spending 3 or 4 times as much if you can get it. And that's where you have to be a little bit forward thinking and say, hey, I have to do this. I got to make it a priority. And I'm not just saying this because it's what I do before it's too late. And that's where I get involved usually. And it's, look, man, or look, we talked about this 2 years ago. Now you've had a situation and, it's unattainable or it's going to cost you 4 or 5 times as much. So that's why you do these things.
Yep. I want to thank you also, Jared. You just reminded me that I do have a will and trust, but I created it when my kids were born. It's now been 13 years. I haven't looked at it since. That is certainly something I need to look at because there could be a lot of changes that have happened since then in terms of who beneficiaries are and things of that nature. Seed has been planted in my mind.
There you go.
And go
And even if you don't, Jeremy, at least you took the step, you looked at everything, or you need some very subtle changes. You have to do it. You just have. And again, going back to laws have changed. The exemptions for estate taxes just went up again. That's a good thing for wealthy people. That estate tax exemption. But those are the type of things those people need to look at their wills and trust or life insurances to make sure that they're not adequately covered. Maybe they need to add to their life insurance portfolio or coverages. So I'm dealing with it right now with a family member. Has to buy a large insurance policy because his estate hit a certain level. We're dealing with the attorneys right now. It's a process, but he's dealing with it. And it's not a cheap endeavor. It's a very expensive endeavor. But if he doesn't do it now, it's going to be considerably more expensive down the road if it's even doable. Things need to be checked. Like we said, I keep reiterating it. But if you have somebody, a trusted advisor or attorney, or make sure you are getting these things looked at. You're having a sit down with them and you're reviewing these things just like you would do for your health.
Yep. Jared, I want to talk a little bit about income and expenses, because in today's day and age, everything costs a fortune. And I think that most people live beyond their means. When you sit down with a client for the first time and you review their financial situation, what do you look for first in their income and spending habits?
Obviously, their cash flow, whether it's a single situation, joint, or they're married or they have joint income. Cash flow is like the lifeblood of your existence. It's how you live. Okay. And like you said, things are very expensive these days. And for example, just as myself, my daughter started driving, talking about expenses.
Why do you have to keep reminding me of this? It's right behind. I don't want to think about it for the next 2 years.
I don't do auto insurance, but wow, I went from paying $3,000 or $4,000 a year for my car's insurance to $8,000 a year for just by adding one car and one driver. So you're talking about it, and therefore my umbrella policy, which is something that's tied to your auto insurance and your homeowners, went up, doubled. And when you're looking at cash flow, just a birthday, my daughter's 16th birthday triggered me to realize, hey, I better look at my budget. And you should have a budget. Okay. That's something when you talk about cash flow, your income, money's coming in. One, make sure you have a budget, which changes all the time with something like that. Two, making sure that you're doing things in the most tax efficient manner. Okay. Is your income, are you putting money into retirement accounts, which hopefully, if you can, you should be. If you have a 401k, it's pre-tax dollars from, unless you Roth it, which won't get into that. Are you putting money into, let's say, for education, if you have children, whether it be your Florida prepay or a 529 plan, which is earmarked for colleges. So when you look at your cash flow, do you have a budget? And you don't have to get very complex with your budget unless it's you have a very complex situation. You can easily put it into an Excel spreadsheet, even if you're not that proficient in Excel. You have your line items, your rent or your mortgage, your monthly food bill, public, blah, blah. And there may be some assumptions that have to be made, but you should have a budget, know what's coming in, know what's going out, and hopefully you have more coming in than
you have going out.
That's always the case. Look, at certain months may be different because you need a new roof or you have an expense that incurred, because whether it be a home or a rental situation or whatever. So that's, pretty much like going to the doctor, making sure that checking your vitals. Those are your vitals. The money that you're bringing in is your vitals, and making sure that you're doing it in the most tax efficient manner is very important, especially when you're in a very high tax bracket. But even if you're not, why? I took an extension of my tax. I just had to make a tax payment. I do this. I was talking to my bookkeeper, my accountant, and we're talking about, this is my business. Is there anything I could have done to lower my tax? And they're like, there's only so much you can do.
Yeah.
As savvy as you are or want to be, you're going to pay taxes, and hopefully.
Well, the good part about that is if you're paying a big tax bill, it means you're making a lot of money. So
I always tell my clients, they complain about taxes. I said, yeah, you got rich people problems.
Yeah.
Look, it's even if you're not a high earner, there's still ways where you can limit your taxes. Look, if you go from paying $4,000, $5,000, $6,000 a year in taxes to it's a lot of money, $4,000 that you're not paying on taxes. Obviously, if you're a very high earner, that's more 50, 60, 70, 80,000, or maybe even more sometimes. But even if you're not in a high tax record or high earner, or you just still 1,000 or 2,000 or a few $100 it helps. It's money you can put away. It's money you can save. It's money that can go towards something that you want. Those are things that, like you said, cash flow is the starting point. It's, hey, what's coming in, what's going out, establish a budget, and hopefully if there's more coming in than going out, you can put that towards some sort of retirement or savings.
So, Jared, one thing that I started doing recently that was very helpful was going back to the Excel spreadsheet. I started just keeping track of everything I was spending. And if you haven't done that before, it will blow your mind at how much money you spend every month on things. You just don't
Yeah.
realize you don't keep track of it. And what that does, and what it did for me anyway, was that when I was tracking that and I saw all the food expenses and the eating out, and I saw the mountains of expenses, just like secondary expenses, thousands and thousands of dollars a month, it starts to get you to think the next time I'm going to Uber Eats food for $60. I'm like, do I really want to go add another thing on the Excel sheet and make my, no, I'll go cook something now. So again, it's just like sense of mind. And it's back to that mindset, right? Setting these habits and just being aware of what's going on. And it really goes a long way. And it's so easy to slip out of that because I started doing it and then I stopped.
It's also another, you look, these are awesome. These phones, they're wonderful. These computers. But the issue with them is it's so easy to put your phone against the pay thing and pay for everything or have everything automatic. Years ago, 15, 20 years ago, when I was younger, and you too, you would know when you're spending money. You actually had to go into your pocket and take out a dollar bill and give it to somebody, or you took out a piece of plastic and you gave it to. Now you don't even have to do that. You can literally take your phone, put it down, and it's paid for, or prepay stuff, or automatic pay stuff. And like we talked about, I think the last podcast about, or the time before, about checking your subscriptions, checking your everything's on autopilot, and you forget, me included, hey, what am I paying for every month? And most people have 2, 3, 4 credit cards. So there, as opposed to 1 or 2 where you can just easily track. So you're checking 4 or 5 different credit cards. You forget to check. You're just paying. You're not even checking, what you're paying for half the time.
Yeah, you got a credit card that has an auto payment coming out for 30, 40, $50 a month. That's on auto pay.
Yeah.
And you get 8 million emails. You don't even check the statements. And then you look at it like a year. You do one of your financial checkups every year.
Yeah.
And you look through, holy shit, I've been billed $600 for something I'm not even using.
That's it. I just literally, for me, myself, and I'm pretty on top of my stuff. I have American Express Platinum card for my business. And I was just told that if I joined Walmart Plus or Express, whatever it's called, and I don't really shop there that often, but it's free. Like you get like a credit to account that I could get Paramount free. And I've been paying for Paramount for almost a year now. And I'm like, what am I doing? But these are the type of things you're like, you got to take a step back and say, okay, one, do I need all these different subscriptions? Probably not. You want to watch all your shows and everything. You go from cutting the cord, oh, I'm going to save so much money, to joining 15 different streaming services and paying just as much, if not more, for cutting the cord. So I'm like, we talked about it, but you're making sure you're checking your auto subscriptions or whatever you're paying for an auto draft, making sure there's no other ways that those things can be paid for, maybe through a credit card or a rewards program or something like that. And there's so many different, I don't know all of them, but you see them online. There's so many different apps that you can actually use to actually check this stuff for you. Hey, what are all my streaming services subscriptions that I'm paying for? Let me check these. Even on I have a bank, Wells Fargo, and they actually, I didn't even know, like I got an email saying, here, this is what you spent this time last year. And they compare it to what I'm spending. You spent a little bit less or a little bit more. Oh, hey, this is free. And all banks have it now. You can see, hey, what am I spending more on this year than last year? Why am I spending more this year than last year? What are the things I'm spending more on? Yeah, there's so many different things to use. I know a lot of it's overwhelming.
That's part of the problem, right? There's no shortage of resources, but it is wildly overwhelming because we only have some time and we don't want to be overwhelmed with this stuff all the time.
And it is overwhelming with all the different softwares and things you can use. But most people have access to these things just through your bank. Go online, you take 10 minutes, you can check where am I at. It probably does your budget for you if you really played with your port, went on your portal and played around. So, you have all the access at your fingertips. As overwhelming it is, we get caught up in life. Sometimes just take 10, 15, 20 minutes and just do a quick thing, or get a referral from somebody, or call me or whoever, and sit down. And even if you have to pay a little bit a charge to sit with somebody and look at your finances It's important because probably on one sit down, you can save yourself whatever that meeting cost you, if not a lot more, especially if you're down the road. Definitely take a look at your finances, sit down with somebody if you don't understand it or you have questions, and sit with a professional, somebody you can trust. And if you need to make changes, it's not that hard. It really isn't.
Why they don't teach this type of stuff to kids in schools is beyond me. I don't know the curriculum, I guess, in high school yet, because I don't have kids in high school, but certainly they're not touching these topics. The kids should be exposed to this from elementary school on, like basic concepts about financial health and managing your situation. I don't know why that's not in the curriculum. We wait until we get into the real world to deal with this stuff. And it's just like train
No,
up.
I think in Florida they just mandated some sort of finance classes in high school, so some sort of financial literacy classes. I think that was something recently that's been passed. But you're absolutely correct, and I have a client who's a physician, a couple clients who are physicians, and they go through 7, 8, 9, 10 year, whatever it is, of school to become a doctor, and most of them don't even take one finance class.
Yeah.
And then they start
You get out with $500,000 in debt.
practicing. Yeah, they start practicing, making a lot of money, or they start a practice on their own and have no clue what they're doing. My brother included. My brother is a surgeon. Finally, after 10, 15 years, he started learning. And now he's savvy. He really took the time to sit down. He calls me all the time and asks me questions, and we have nice conversations. I'm very close to my brother. He's in a different level. He's a surgeon. He makes a lot of money. He's always looking ways to save taxes and this and that. But he has the means to have attorneys, set up trusts and wills, and have accountants and financial advisors. Not everybody has that luxury. But going back to what you said, everybody should take a finance class and a class on economics. I tell my kids, same with AI. Like, you should be, if you're not taking AI or taking technology or computer engineering or some sort of computer science, in 10 years,
Missing the
you're
boat.
going to be way behind.
Yep.
So you might as well start that process now when you're young.
Absolutely. Something you alluded to earlier, I want to touch on real quickly, is the emergency fund. What's your typical rule of thumb for an emergency fund? How much does somebody have put away, and where should that money live?
3 to 6 months. Some people say 6 to 8 months. I guess it just depends on. I think you should have emergency fund. I don't think you need a year's worth of expenses. I think somewhere between 3 to 6 months is fine. Where should you put this? You should put into something liquid, because if you do need access to it, you don't want to have to start selling things so something like a high yield money market fund,
Yep.
which most banks have. Some have minimums. If it's not a high yield money market fund, don't put it into a CD, because CD, if you need it and you need to get out of it, there's usually charges on the back end. If you have a 6-month CD and you need to get out in 3 months, you could be charged a fee for that. So put it into things that are liquid. Hopefully the money market funds are paying close to 4% now. They're variable depending on the interest rate environment. But I have about 4 or 5 months in emergency fund in a high yield money market that's sitting at my bank. So it's important, because anything can happen in life, and you don't want to have to start scrambling if you need money, and whether it could be a very contentious situation where you need money tomorrow or the next day. And so you don't want to have to start unwinding investments to get that money. You want it to be accessible and liquid. And that's what I would say. 3 to 6 months is fine.
All right. Noted, Jarrett.
Yes.
What would you say if someone's out there listening and they feel behind? Their finances are a mess. Maybe they're in that unfortunate situation where they have more going out than coming in, and they just feel like they're drowning in debt. What's one simple place that they can start to take back control of their financial health?
I don't think there's one simple place or step, but what I would say is, I would say first things is most people, the number one issue when you're most people in that situation besides is credit card or debt. Okay. Making sure, if possible, that what are your interest rates you're paying on that debt? Are you able to transfer into do a credit card transfer? Sometimes it costs you a little bit, 2 or 3%, but if you're paying 20% on a credit card when you can transfer it at a 3% charge and pay 10% or 12%, it makes sense to do that. So I would say start there. Okay, what's your debt situation? What are you paying on your debt? Can you refinance these things? Some people have student loans. Sometimes you refinance those student loans. Interest rates have come down a little bit recently. They shot up last year, obviously, due to the inflation situation. Hopefully, we can see a little bit of a drawdown on interest rates. For people in debt, that's a good thing. For people who need rely on fixed income, that's not such a great thing. But looking at your debt, making sure your credit, what's your situation with your doing a credit report. You can get these online, creditreport.com.
People don't realize how
Yeah.
much money you would save throughout your life by having good credit versus having just that all the times you borrow money and paying higher interest rates over time when loans are amortized. Like you could pay hundreds and hundreds of thousands of dollars in additional interest just by having a sub-savory credit score.
100%. And so if your credit is not strong, why is that? Is it your ratio of debt to you have a high debt ratio? Are you late on certain bills, credit card bills, medical bills? Can you call them and hopefully work out a payment plan and get it off your credit report? I would start there. Okay. Typically it's easier said than done because sometimes you don't have a lot of options. Okay. You really don't. But working out a way to dig yourself out of that hole, whether it's just talking to the credit card company and say, look, I want to get on a payment plan. They'll work with you. Trust me, they want to get paid. Okay. They'd rather not go to collections and get 20 cents on the dollar of whatever you owe. They'd rather work out some sort of payment plan with you. They all will. Okay. They all have these departments that will do it. And they're pretty empathetic to the situation. So I would start there. How much debt do you have? What interest rate are you paying? Check your credit. That's a good starting point. Secondly, we talked about cash flow. Okay. I'm bringing in this, talked about a budget.
Yep.
Where is it coming out?
Adjusting the expense.
What?
Just
Yeah,
adjusting the expenses,
yeah.
fixing the budget.
I think we talked a few podcasts ago about needs and wants. Going out to that dinner. We all want to go out.
I need to eat, but man, I want that steak.
Morning. Where are your needs versus your wants? What are your needs versus your wants? Obviously, you have your needs. Most times you can't tweak those. Sometimes you can. Am I paying too much? Should I check my insurance rates, my auto insurance, my homeowners? Just doing these things, my cable bills, my FPL, and I get these things from FPL all the time. Where am I spending too much on energy? Is my AC efficient? There's so many different things you can do. Checking your debt, checking your cash flow versus your expenses, doing a budget. Those are the things that it will open up most of the time. Hopefully not a can of worms, but you'll see a bigger picture. Just take some time and do this. And then you can say, okay, hey, look, I can cut this, I can cut that, or I can not go here as much and try to make my coffee at home. Or it sounds trivial, but believe it or not, most people they don't want to deal with it. But if you actually sit down and deal with it, there could be a lot of different ways that you can be saving money, that you can be more efficient with your money, that you can be cutting your expenses. So there's a lot of different things you can do. You just got to do it. Most people just don't do it.
Just do it.
They just don't want to do it. They don't want to deal with it. It's stressful. It's not a fun thing. Like anything else, the worse it gets, the more it will become a problem in the future, and the more you're going to be dealing with it even more. So nip it in the bud now.
Yep.
That's it.
All right. I like that. So we'll leave on that. We're in a leaky boat, right? We got holes in the boat. What do we do first? We plug the holes. And what are the holes? Debt and excessive spending.
Yeah.
We'll manage those two things first, plug the holes, and then we could start to build from there.
Try to plug the holes, at least put something in there to slow the leak and try to find a solution. Hopefully you can get that new boat, or hopefully you can get that something to plug that hole fully, but at least put something in there temporarily to slow that leak, and then work on hopefully doing something where you can permanently plug that leak forever.
Pretty soon, you'll be riding in a yacht, my friend.
That's perfect. Exactly.
All right.
Exactly. If that's what you want. Some people, that's okay if you don't want that yacht, but at least you're able to aspire to do what you want. If you have whatever your goals are, whatever you want to buy in the future, you set yourself up now That's why I always tell my kids jokingly, oh, Dad, you should get this car or that car. I said, if I didn't have you, I'd have 3 of those cars.
Yeah, exactly.
But you make sacrifices now, okay? So you don't have to sacrifice in the future. And that's what retirement planning is all about. For most people, some people make enough money, they don't have to worry, but make sacrifices now so you don't have to make sacrifices later, okay? And that's what financial planning is all about. It's sometimes you have to put things to the side for whether it be a year or 5 or 10 years. So down you can save where down the road you can enjoy that. Okay. I'm not saying don't do things and have fun with some money now and enjoy your life, but there are certain things that you just need to delay a little bit, save for, make those sacrifices, and then plan accordingly, and then you can afford those things in the future. That's what planning is.
You put $1 in, you put $1 out.
That's right.
The hokey pokey in, you turn.
Yeah, you just got to do it. And it's like I said, it's easier said than done. And it's discipline. We talked about this last part. Discipline, having a plan, and sticking to that plan as much as you can. And discipline. That's it. Most people don't have it. And also, one of the major, my kids, and even me sometimes, all this stuff. What does it lead to? Instant gratification. Investing is not instant gratification. Investing is not buying Bitcoin and hoping it goes up 10% tomorrow or 15%. If you can do 10% a year, that's a great year. Okay. If you do average 10% a year for 5-10 years, that's unbelievable. But we are influenced by instant gratification. We just want to do it. You want to put a plan in place and it's going to be done tomorrow. No, planning takes time. It takes years. And it takes patience and it takes discipline, like we just said. And you're not going to do it overnight. Okay. So when you set a plan, you can tweak it throughout the years and change it and make sure as things change in your life. But if you're not disciplined and you're not patient, it'll never work. Unless you get lucky and inherit a lot of money, which a lot of people down in Florida do. But for me and you, unless you're maybe you come from a wealthy family, I don't. It takes years and years and discipline. But if you're consistent and disciplined, you'll do it. You'll do it. It's like anything else. You got to just set goals like you would do for things that non-financial and stick to it and you'll achieve your goals. I truly believe that.
Sounds good, my brother. We'll leave it at that. Everyone, thank you so much for tuning in. If you found this content useful, you know the drill. Don't forget to subscribe. Leave us a comment. Let us know if we missed anything. If you'd like us to touch on anything in a future episode, let us know about it and we will bring it up then. Everyone take care. Have a wonderful day and we will catch you all next time.
So joining everybody. Enjoy.
Thanks for tuning in to the Osborne Financial Group podcast. For more financial tips and personal advice, visit us at www.osbornefinancial.com. That's www.osbornefinancial.com. Or give us a call at 954-963-3300. Take charge of your financial future today.